Now, with the KPC IPO, it's drawn a lot of interest. Yes, a lot is at stake in terms of what is being offered, the 65% stake, but it's drawn interest. And in the same line, it has drawn some misinformation. And we need to straighten out one or two things that is out there at the moment, Dr. And I'm talking to Dr. Belgrad Kenne, who is lead transaction advisor at Faida Investment Bank. And you've definitely been monitoring what's being said, how it's been received since the IPO announcement on January 19th. Let's speak to the lies that are out there and address it directly.
Thank you, Mark. And it's a privilege to be in this show, being given an opportunity to actually, give our side of the story, because I always say that the people speaking the loudest about valuation are not necessarily right. And some of them, including the right honorable members, are not even qualified or certified, to provide such services. I want to emphasize that when it comes to valuation, we're talking about a regulated process. We're talking about an exercise that is guided by the International Valuation Standard. We're talking about an exercise that involved professionals, including those who conducted, the fixed asset valuation. We're talking about an exercise that involved, professionals in what we call the market sounding exercise. So we did actually reach out, to professional investors in this country, and just sounding them out as to what really value they will be putting out there. As you know, in this process, if you talk to the seller, that is GOK, the CS Treasury holding it in trust, on behalf of Kenya, and, the expectation would be up there. They'll probably tell you that if they had gone probably the private placement route, we will not be talking about, 164 billion valuation. We'll be talking about numbers north of 200 billion. But it was a strategic intent by the government of Kenya to ensure that this national asset, is, democratized in terms of ownership. I keep mentioning that we're not talking about the sale of KPC. We're talking about the sale of KPC shares. And one of the most important metric, you hear actually the cabinet secretary speaking to that effect, that
Yeah.
one of the most important measure of success of this assignment is how many Kenyan would actually participate into this IPO. And therefore, when you talk to the seller, they will tell you, much as they could not raise or maximize on other route, they prioritize, the IPO as a way of privatizing KPC, so that as many Kenyan as possible can chip in. Now, I was telling you about, the process that is valuation, a process that's guided by standards, international standards, a process that involves professionals that are certified, a process that actually goes through the internal approval of governing orders of the transaction. So you understand that, between the KPC board all the way to the Privatization Authority Steering Committee, they had to actually look at, this exercise, review, challenge the assumption, and then assumption by professional in this case, and then, give in their input that then goes to the Capital Market Authority for review. So from a methodology point of view, it is well guided.
Right.
Now let's speak to the comparables, or actually I would say the outcome of that valuation. Again, if you look at it, the valuation, again, we're talking about an asset-based way of valuing a company. We're talking about an income-based way of valuing a company. And last but not least, what we're calling the peer valuation or relative valuation. So typically, if you're talking to the professional, those who are qualified, I'm not talking about members of parliament who are overstepping their mandate, but actually those who are qualified to talk about this, they will tell you there are three methods in looking at these things, okay?
Yes.
One is asset-based, the second one is income-based, and the third one is relative valuation.
Right.
Now, when it comes to asset, you involve, due diligence expert to look at, the physical assets and intangible assets of the company, and they sign off at 123 billion. That is the fixed asset valuation. We're talking about a 50-year-old company, sitting at 123, 124 billion in fixed asset. Obviously, you have to pay a premium for that.
Yes.
Not only because you're dealing with a 50-year-old, but because we're dealing with a monopoly in this country.
Yeah.
Okay. And remember, we're talking about balance sheet that's debt free. So when we talk about a total asset, it's pretty much, without any debt in this particular context.
Yes.
And then you go to the income side, and then you understand that, typically the comparison that's being brought out there in terms of, earnings, price to earnings, is one that I would say the honorable member is misleading the public. And I want to say this categorically, that we should not play politics with Kenyan savings, and by extension, with Kenyan investment. Because when you take three companies, that is, KPLC, Kengen, and Total Energies, and you tell us, in fact, that you're looking at KPLC and Kengen in terms of price earning ratios, and then you bring on stage, for the decorum, a few guys to say, well, where's the PE? Understandably so, today the PE of KPLC is at 1.18x. Okay, the PE of give or take Kengen, typically you're talking about 6x. And then they did mention that the highest PE possible for KPC would be 13x. Well, the market has been very loud about 22x, and I want to say that 22x is a trailing number. KPC financials, they end as of June 30th, all right? So in 5 months, we'll be closing the book. So we've actually crossed H1. So it's important for us to look at the prospective financial information within the information memorandum and make some analysis based on that, prospective information. So if you look at it, the PE of KPC, as projected for the next 5-month closing, will be at 16.9. Okay, X. Now, if we look at 16.9, and everyone is talking about 1.1x and then 6x for both KPLC and Kengen, there's a very simple question I want to ask Kenyan. Do you believe that if KPLC indeed was the most attractive stock at the Nairobi Securities Exchange, do you believe that investors would be shying away from queuing, literally, Mark, queuing to buy into this asset? Why is it that despite that, pedestrian comparison by the honorable member, why is it that despite that comparison, investors are not queuing to buy into KPLC? Of course, he's, I don't want to get there, but if you look at the metrics that drive valuation, the adjustment that you have to make in terms of how fast can you grow as a company. So growth is important in that discussion. All right. The same would be said about margins. All right. So if valuation was all about PE, then everyone would be expected to be trading at a securities exchange at 1x, the same way KPLC is doing. Why is it that the NSE today is trading at a PE of 44x? The NSE, the Nairobi Securities Exchange, is trading at 44x because investors have priced in the many market activities that are happening. And because of that outlook, they are happy to pay, a higher price. Because remember, returns are not just function, of earnings and price. So there are many variables that go into it. Now, we're talking about these particular companies, that is Kengen and KPLC. And I've told you categorically that it will be an attractive proposition to any investor if the comparison was as simple as that. Now, we've brought in elements of growth. We've brought in element of margin. Let me pause on margin. If you look at KPLC margin, there's something we call the EBITDA margin, all right, which is at an operating level. Those EBITDA margin, the EBITDA margin of KPLC today, it stands at 25%. Okay. Now, what is that for KPC? Double that. We're talking about double the margins of KPLC. Now, if you go to what we call the bottom line, the net margin of KPC as we speak forward, if you look at the prospective financial information, we're talking about 21 billion in 2026 in terms of revenue and 9.6 billion, in terms of net income. So if you do the 9.6 divide that by 41, that's what we call the net margin. It will give you close to 24%. That's pretty much the operating level of KPLC. So we're dealing with a high margin business. That's not the case with KPLC. All right. And now in terms of growth, let's talk about that. KPC, despite it operating under government bureaucracy, has delivered growth to the tune of 8.4% in what we call the CAGR, which is the compounded annual growth rate. Okay, so that gives you an average annual growth in terms of revenue. Remember, Mark, I want to go back to it. High margin, high growth. Okay, we're talking about very high EBITDA margin, very high net margins, and then in terms of growth, look at it within the government bureaucracy, and despite that, they've delivered 8.8. For context, Safaricom, within the same period, has grown same number at 8.8%, CAGR, which is the compounded annual growth rate. That is Safaricom. And I like saying this because when we look at this market, the only comparable actually that you would compare KPC to, it is not KPLC with a market cap of 29 billion.
Mm-hmm.
It is not Total Energy with a market cap of 6 billion. It is not Kengen with a market cap of about, 63 billion. In fact, Mark, those comparables that everyone is talking about, if you total the capitalization of these three companies, they are nowhere near the capitalization of KPC. If I tell you that 6 billion does not even make half of the cash that KPC sits on. KPC is, we're talking about 16.2 billion in cash. That's more than double the total market capitalization of Total. And again, you're talking about a monopoly. KPC is a monopoly in this country. Total is competing with 145 other oil marketing companies. And this is a downstream operator with very low growth prospect. So really, we will not spend time, comparing a company whose total capitalization barely make half of the cash of KPC. And then we go back to KPLC and we look at it from a growth perspective. There's very little growth going into the future. The prospective financial information that you have is talking about 13% growth by KPC. 13%. And I was giving you a comparison with Safaricom. You should be asking me, what is the EBITDA margin of Safaricom today? It's the 50% we talked about. Okay? What is the average growth that Safaricom has delivered? In the past, it's 8.8 against 8.4. We talked about dividend. I have heard people say, when you compare these companies on dividend basis, we're talking about, KPC having a dividend yield of 3.9 and others being significantly up. I have shown you the price to book of all these companies, that is KPLC and Kengen, they are trading at 0.25 of their book value, meaning you look at their physical assets and investors are saying, of the 100 shilling that you're telling me you're worth, I'm only willing to pay 25 shilling. Of the 1 shilling, I want to pay 25 cents. That's what the book value multiple tells you. And then you should be asking yourself, if it was that attractive, then why are investors paying such a huge discount, to get into that company? And structurally, you will start to understand that these companies are not the same. KPLC being a utility, much as it's capital intensive within the energy sector, you will never want to compare that because the ownership structure is different. The margin structure is different. The outlook in terms of growth is different. So really, you cannot afford, as an investor, to parade and sit on that. Now, they talk about dividend yield. Of course, the dividend yield will be higher because the price has been depressed. We're talking about giveaway prices, 25% of the actual value. So when you have, a lower price, obviously with the dividend that you're paying, you get to see a high dividend yield. But normalize that price to the factor of 4, and then you will understand that really that dividend yield will be much more depressed. Again, if you look at the books of KPC, the 3.9% that we're talking about, and going into the future, when we say the dividend yield of KPC is at 3.9, I want to go back to Safaricom. The dividend yield of Safaricom today, as we speak, is 4.1%. Okay? So, Mark, tell me something. If my revenue growth is similar to Safaricom, all right, at 8.4, having operated under bureaucracy, that's my revenue growth. My EBITDA margins are similar to Safaricom at 50%. Okay? And then we're talking about dividend yield, give or take 3.9, 4.1, give or take the same. Now, I'll tell you something about PE of these two companies. That is Safaricom PE ratio and the KPC PE ratio. They're the same. Safaricom PE ratio today is at 17x. This is not dropping from the sky. This information is available for every analyst to look at it. 17x. I have told you about the forward PE of KPC at 16.9. Now, the honorable member is talking about Safaricom being undervalued. Okay? So if indeed at 17x, Safaricom is undervalued, I will make a conclusion that KPC is undervalued. I mean, why the double speak? Why the double standard? We're not playing politics here.
Exactly.
Okay? We are professional. And our job in this market is not to lean on either side. Whether it's on the side of the seller or any other one. And I want to reemphasize, let the valuation discussion be handled by professionals. And last I checked, the honorable member is not such a professional. I want to be very categorical about that.
Very clear.
All
I mean,
right.
that's why I've given it ample time to hear from the doctor. So even as you watch this, observe this, you hear what is being said on the streets, on podiums, political or otherwise. Listen to the experts, such as Dr.
Mark, I
here.
want to pick something up.
Yeah.
All right. Because when we talk about PE multiple, it's actually a distraction,
Right.
by those who are not qualified to talk about this. Because if you look at the consensus metric that should be used to value a capital intensive business, it is not a PE. All right. So we're being dragged to this discussion,
Right.
by fellows from the street who believe because they allow this in this market,
Yeah.
all of a sudden they're expert. Let Kenya not be fooled. Okay. Because if you talk to any professional,
Mhm.
PE will never be used, for instance, to value a bank. There's a multiple that professional will use called the price to book.
Mm.
The same way when it comes to capital intensive businesses, there's something we call the EV EBITDA. Drawing from the earning based approach, but really normalizing for abnormalities, because the lower you go to your bottom line, the higher the likelihood of manipulating earnings.
Mhm.
There's something analysts will call quality of earnings. Okay. So if you look at a business like KPC, where the capital structure is debt free, okay, and then you look at other capital intensive businesses to fund their expansion, typically they will leverage debt, etc., to actually drive that conversation.
Yeah.
So when you go down, you adjust the operating profit. So EBITDA is actually what we call a proxy of free cash flow to firm. And you adjust for, differences in accounting for depreciation.
Mhm.
You adjust for differences in capital structure, because that's where now, if you have debt, you'll be paying interest, okay, for instance. And you
Yeah.
also adjust for, tax treatment, okay? And that is why expert will tell you that the consensus metric is the EV EBITDA. And that is what was disclosed in the information memorandum as
Got
the
you.
basis for setting the price.
Right.
Now, when it came to comparable, acknowledging that KPC was unique in this market, where I have told you that Total is not in the league of KPC, with all due respect, KPC will be the fifth largest capitalization at the Nairobi Stock Exchange when this is listed, with the assumption of full subscription.
Mhm.
That would be 5% of the total market capitalization. And when we say fifth, it's slightly just behind Safaricom,
Right.
two banks and EABL. That is KCB and Equity, EABL. Then you have KPC.
Mm.
So we are not in a discussion where we want to bring in, size is a factor when you're looking at valuation, okay? And then the nature of the business. So what we did, in the absence of a comparable, because I've told you the only comparable in this market would have been Safaricom. But let's look into the core business of KPC, which is storage and transportation of fuel
Yes.
products. We've gone out to look for those comparables, where in India we found a number of companies providing this particular service, and also in the US. Why the two? Because we wanted to be neutral on the geography. We didn't want to be accused of using purely emerging market or purely developed market. We use two comparables from the Indian market that we felt closely match the business of KPC. There are more pipeline in India, but then we narrowed it down to two, and then we also narrowed, the two of the US, so that it gives you neutrality in terms of geography, so that you're purely focusing on comparing like for like.
Right.
Those are the four, and that has been disclosed even to the authorities of this country as to how we arrived at the valuation. And the metric that we were looking at was the EV EBITDA. And for those reasons, if you look at KPC Financial, it ranked the best in class in terms of growth that it has delivered over the past 5 years, in terms of the margins that it has delivered, in terms of the balance sheet. It is debt free with cash of 16.2 billion. So best in class, yet the average EV EBITDA multiple to which these companies were trading at, the average was 9.1 with a median at 9.56. Now, we offered this issue at an 8.1x, multiple. That is, more than 12% discount. Why? Because we accounted for what we will call now your country risk, because perhaps the cost of financing might be different in some of these countries. So we had to make those adjustments. And as we speak today, we've seen analysts in this country telling us that, some of these analyses are giving them a price of 10.5, shillings, as opposed to the 9 that is the issue price. Of course, they've been, different quarters, everyone with their opinion. But at the end of the day, we stand firm on our professional ground. We stand firm on our conviction that, we've given Kenyan, fair value. And that's really what matters.
And Dr. again, I've not interrupted that just to be able to set the record straight, because those attempts to put different narratives on this would definitely not stand against the facts that you have given. And I appreciate that. So give us, and now that it's clear that the numbers weren't just picked from the air, a lot of thought went into this with the team that was a lead transaction advisor that you are part of and that you lead in many ways, and you're really passionate. I can hear that in your response, and I understand why it is uh, it's offensive in many ways to have someone try and put some facts out there when you know the work that has gone into this. So part of this work has been to say, why now? You've put some thought into why is this a good time for the divestiture for KPC? Some might say, hey, it's working. I mean, it's debt free, it's working, profitable. Why is this divestiture the right time now for
Thank
KPC?
you, Mark. I think I'll take you to history. That is 2009. That's when this process started, and we had no control over it. But more importantly, the objective of this assignment were very clear, given
Yes.
to us by GOK. You know, it's a process that started with a program, gazettement in 2009, and then it was taken to cabinet,
Yes.
and then it went through parliament, you know, with the joint committee sitting, and then outcome of which was the sessional paper number 2, 2025. And then the privatization authority was, you know, the implementing agency, you know, of this particular assignment. So when it comes to the timing of it, I think it's a process that several governments in the past have attempted to complete, and it just found us, you know, here, you know,
Right.
occurring. Now, specific to the objective, if you look at the sessional paper, we have three objectives, okay? That is, you know, facilitating government to raise non-tax, non-debt, all right, revenue measures, okay? And that is the 106 gross proceed that you see will be going into the consolidated fund for development purposes. I do not speak for government, but then they're very clear as to the use of proceeds. And that's objective number one. But they have reminded us over and over again that the measure of success of this particular discussion
Yes.
will be how well we onboard as many Kenyan as possible. So the second objective was deepening our capital market, democratizing the ownership of this national asset, ensuring that, you know, any Kenyan anywhere, irrespective of their social status, is given an opportunity to own this particular asset. And they keep reminding us that, yes, you may have an interest from the institutional, from the OMCs and others, but the only way we will sanction success of this would be, you know, you delivering to us not less than 2 million Kenyan owning this particular asset. So that was second, okay? The third objective, which is equally important, is unlocking the full potential of KPC. As you know, operating, you know, within the government framework, government will tell you they're happy to receive dividend, but they have no business receiving dividend. Okay, their job is policy direction, you know, enabling the environment, and not competing with private sector in businesses where, you know, private sector could actually run better. And the conversation about KPC is this is a mature asset. You know, government is happy, you know, to actually share that ownership with the rest of Kenyans, you know, exit that particular conversation, which is a partial exit, I must admit.
Yes.
Exit that partially so that those proceeds could actually be reallocated elsewhere for purposes of development. So really, to summarize that, we have three objectives. We're very clear about them. And again, when you look at the timing of our market, we think that it couldn't have happened at a better time. Okay, looking at our macroeconomic environment, we are quite positive that our equities market has been on steroids over the past year. Okay, if you look at you know, your 52 weeks or year to date, as we call it, we're talking about north of 55% return to equity investors. And why this? Because if you look at your fixed income market segment, you know, inflation is low, so typically, you know, the central bank has kept the rates low at 9% CBR, but we've also seen yield on the fixed income coming down. So what that means is there's a reallocation of investors actually looking for higher return. And then typically the equity market will be one such places. And when you bring an issue in such a particular time, not a bad, you know, it's really, in terms of timing, it couldn't have been better. Again, our local investors, they're at 60%.
Mhm.
We have 60% of local Kenyan participating at the NSE. Traditionally, we've seen a situation where foreign investor, would be at a higher ratio than the local. But this time round, we're talking about 60% local investors at the NSE vis-a-vis 40. The number keeps fluctuating,
Yeah.
but then again, it tells us Kenyans are really, happy to participate in this particular issue. Last but not least is the impact of technology.
Mhm.
We talk about Safaricom often time, but then that was in 2008. Today we're talking about an e-IPO. That is end-to-end seamless, fully transparent
Mhm.
with very little in terms of manual intervention.
Yeah.
And for us, again, fast forward 18 years later, that gives us, significant head start when it comes to, the turnaround time that we're able, to achieve in this particular issue. So really, Mark, we're happy with the timing,
Yeah.
but we were not in control of that
Speaking of the
particular
timing,
conversation.
it's a bit early in the day to talk conclusively about the response to the IPO in terms of there's appetite, but the response. Now that we are clarifying issues, because characteristically, people watch first and then as they decide. What are you tracking? What are you noticing so far? Because it's real time, as
That's a
you
good
made me
question, Mark.
understand.
That's a good question. We are running an e-IPO. What that means is that we're able to track real time,
Mhm.
applications and all movements in
Mhm.
regards to this particular issue. And, from the portal, we can already tell that there's significant interest. And then again, I keep telling the audiences I've had an opportunity to talk to that outside the retail segment, which is now looking at the local institutional, looking at our regional, our OMCs, and our foreign institutional. I mean, we expect significant oversubscription in each one of those segments.
Mhm.
Remember, Mark, we're engaging these investors on an ongoing basis. All right, even pre-opening, already, immediately we were announced as the lead transaction advisor. We receive a lot of inquiries.
Yeah.
And in fact, that has accelerated in the past few days. So in those segments of the local institutional,
Mhm.
of the OMCs, of the regional, of the foreign, you can take it to the bank.
Mhm.
Fully subscribe. The conversation now is more on, how to participate. But
Yeah.
we're also telling them that there's a secondary market. If you miss out on the primary market,
Mhm.
we're happy, to continue that conversation on the secondary market.
Mhm.
But as I told you earlier, that was not the objective of this IPO. The objective was to focus on the ordinary Kenyan
Yes.
and ensure that we lock not less than 2 million Kenyan. Therefore, the work is still out there for us to do. And that is why, we are even happy to be in this studio, because you'll be
Mhm.
asking me, if it's already oversubscribed, then why are we still here? Because we are launching what we're calling, an information campaign.
Yeah.
Perhaps some will call it a charm offensive to Kenyans, not
Yeah.
to miss out
Yeah.
on this historical, momentum. Really, for us, we think the 2 million target is achievable,
Mhm.
provided we demystify and deconstruct some of the false narratives that are out there. And
Yeah.
we're happy to do that
Yes.
all the way to Mashinani.
All the way to Masinani. And I like that because there's now the confidence as well. Oversubscription. I've heard it with all the experts we've spoken so far with. They are confident of oversubscribing, being the case. And with that, have you put any consideration for over allotment to perhaps make some room, or is a 65% stake
It's cast in stone.
cast in stone?
It's cast in stone. I've
Right.
heard people ask us about green shoe option, etc. I want to refer everyone to the sessional paper.
Right.
That is really the reference document of this transaction.
That's the Bible.
That's the Bible of
Yeah.
this transaction. We cannot go outside the objective, of that particular paper,
Okay.
which was very clear. If you look at GOK stake, post IPO, at all times, let me repeat, at all times, it must be at not less than 35% at all times going into the future. So when you look at the MEMATs that have been drawn and revised, the Memorandum and Articles of Association of KPC, now as a PLC, post IPO, that is captured, in black and white,
Yeah.
that GOK, even in an event of rights issue, they cannot be diluted. It's what the lawyers are calling a non-anti-dilutive provision. So the 65% is really the max that you can get. In fact, the paper told us about up to 65%, which is what we're maximizing right now.
Yes.
We do not see, any possibility whatsoever, to go outside those particular, frameworks. So I really just wanted to be clear about that. Now, speaking about the oversubscription, I think we want to assure Kenyans that for as long as you've applied to this issue, you will be considered. No one will be left behind. That's the beauty of an IPO. And that's why perhaps GOK chose the IPO route for privatization, because really it ensures transparency. And that's why there's an allocation, a table that has been disclosed in the IM. There is full transparency. There is no backdoor deal with any private party, because we've also heard
Who'll come and mop up.
a lot of conspiracy theory, Mark, that, these are a few boys, meeting somewhere privately and arranging as to how they will take over KPC. Some have even claimed that it's being stripped off to be undervalued to sell. Now we're back to know it's overvalued. So, if you follow that noise, you will never get anywhere. What we're telling Kenyans is that this IPO, the route that was chosen, is highly regulated by the Capital Markets Authority. In fact, we have what we call the Public Offer Listing Disclosures Regulation 2023 that actually guide us to how to conduct an exercise as sensitive as this. It requires utmost transparency. And then we will be talking about inclusivity.
Yes.
We'll be talking about fairness and equity. And therefore, the offer period is 30 days, 19th of January to 19th of February. Whether you are coming on the first day or on the last day, you will participate and you will be considered. So in an event of an oversubscription, there's something we call the prorating mechanism to ensure that across every investor pool, then, it's prorated to ensure that everyone who apply validly,
yes,
the keyword is validly, will be considered and they will have their shares.
Post IPO, as people are considering investing in this, being a shareholder, and probably asking, I've heard there are plans within the region for countries like, for instance, Uganda, to have their own, pipeline, or at least have their own infrastructure, I should say. Would you see this as a risk to the investment, the changing environment of the pipeline that KPC is built on and thrives on, quite frankly?
Thank you, Mark. That's a good question. I've heard a few people talk about ECOP, which is and I want to repeat, it's the East Africa crude oil. Crude. The keyword here is crude oil pipeline. Okay, so in no way it would compete with refined oil.
Okay.
So as much as Uganda is an important stakeholder, let me appreciate that, an important stakeholder, we do not anticipate that situation to change, because there are two conversations when it comes to the market of Uganda and the regional market, let's say. You understand that there is a conversation around oil production, which is crude, and it will still require refinery. Okay.
Yes.
So producing oil does not necessarily mean that you will be consuming that oil, because you need a refinery for you to consume. The oil that's been transported by Kenya pipeline in inland markets, including our transit market, it's actually, a final product for consumption, isn't it? So in the case of Uganda and in the case of ECOP, for instance, the conversation is how to exit that crude oil, from Uganda through Tanzania out into the sea. Okay. So that conversation does not in any way impact, our market. Having said that, of course, there've been discussion about, a refinery being put up in Uganda. We do not see that happening in the foreseeable future, at least not in the 5 years that we've discussed. And I want to say that when you engage with the various parties, that is KPC and others, you realize that the plans to put up an Eldoret Malaba pipeline, that is from the Kenyan side, is actually driven primarily by our neighbors, who have understood the strategic importance of extending the pipeline not only to Kampala, but also to Kigali and all the way to DRC, which is actually our largest market within the community. So really, just to ease conversation around that, it is not a risk we've seen as probable. It is possible, but then it remains remote. That would be my answer, because within the foreseeable future, expert will tell you that plans to put up a refinery that is significant capex.
Mhm.
Much as you hear there's some discussion with partners within the 5 years. I mean, time will tell, but from where we sit, we think that's not happening. And the comfort we have is Uganda has continually,
Yeah.
signal its willingness, to play its role as a partner in this conversation. And that is why even when you look at the, regional allocation, we have in mind all our stakeholders, be it Uganda or Rwanda, South Sudan, Burundi, and Eastern DRC. We are inviting them,
Yeah.
because we're looking at KPC as a regional asset. That is a regional company.
Mhm.
And into the future, the expansion that we're talking about is also, that transnational pipeline moving from Eldoret to Malaba, to Kampala, Kigali, and all the way to Eastern DRC.
So you are confident that not necessarily status quo remain, but dominance will still be big in terms of the transport distribution of refined. Something else that I want you to speak to in terms of possible changes, if any, is the issue of tariffs and the decision making that goes into that. Whether you feel after post IPO, the pressures of now that you privatize, the pressures of altering the tariffs, whether for profit, for gains, based on the pressure that stakeholders are giving, if it will weigh in, because right now it is set by EPRA, the tariffs. So do you foresee
It will
any?
continue being the case.
Yes.
The regulator is not changing.
Mhm.
Let me be very
So
categorical.
no friction, no
EPRA
conflict there.
will remain the regulator of KPC, and conversation around tariffs
Yeah.
are on a cyclical basis. All right,
Yeah.
it's a 3-year cycle
Mhm.
where the current dispensation ends, I believe, in March. That is the current tariff dispensation. There is one that has been proposed by KPC to the regulator EPRA for consideration for the next 3 years. Okay, and even when you look at the prospective financial information, it's been
Mhm.
modeled factoring some of those tariffs. And I'll tell you that government, being outside as a regulator and not, a regulator and a player couldn't have been better. And remember, government remain, a significant stakeholder in this conversation. These are sensitive matters
Yeah.
where when it comes to, tariff. I think you want to be impartial as a regulator. And then already in our financials, if you look at the prospective information, there is already a schedule that has been submitted to EPRA under consideration. And you'll be surprised, Mark, to see what goes into tariff discussion. It's a robust methodology that does not, favor
Yeah.
any party, because it's all about looking at the inflation of this country,
Mhm.
looking at how much capex you've put in into the ecosystem, and such parameters that will require some adjustment into the pricing. In
Mhm.
some years, by the way, you find that we will be moving from a high tariff regime. In fact, going into the next 2 years, we're likely to see lower tariff. That's a conversation that's happening with IPRA. We hope that will crystallize, and then you find that we're not moving from low to high, but probably from high to low before we go back up.
Mhm.
So I do not see any extended hand of the
Mhm.
private sector, because then government would actually enjoy being the arbiter in this space, considering that this is a national strategic asset.
Right.
And as a regulator outside being a player, we will expect fairness,
Right.
to all parties.
So that's
That
not
is,
going to change in terms of the tariff
I
decision
do
making.
not anticipate, any other consideration but market factors,
Yes.
driving the conversation around tariff.
Well, something that is bound to change based on the plan or prospectus that KPC has and future opportunities is LPG as well as fiber optic.
Very exciting.
Yeah.
Very
So
exciting.
right now it is, compared to what fuel distribution has in terms of revenue, it's not comparable. But what realistic timelines do you feel we have to work with in terms of feeling the contribution to revenue that is
Very
LPG?
exciting. I think I'll start with fiber optic, right? If you look at it today, in fact, globally speaking, the revenue of KPC are driven largely by its traditional business, that's
Yep.
storage and transportation of
Yep.
fuel. That makes up about 98% of total revenue today. For those who have gone through the plan, management is very clear that outside, the PFM, PPDA, SRC, cabinet memo, and the budget process, outside that bureaucracy, they will be unleashed to actually execute faster on some of these initiatives. We are talking about diversifying revenue from 98% of the core to
Yeah.
less than 80% in the next 5 years. And What are the drivers? You've just put it across. Fiber optic, when you talk about technology, we're talking about 96 cores being installed today. Of course, we're talking about dark fiber. And if you talk to management, they'll tell you the income that they receive today is barely a tenth of what
Yeah.
they could potentially earn if that fiber was lit. All right, so plans are on the way to discuss with the off-taker, the likes of Safaricom, JTL, and others, to actually move that conversation from about 4% market share that KPC enjoys today to be a dominant player in the
Yeah.
next 3 to 4 years. If you actually look at the financials, there's a 600 million that is being put in 2026 as an investment into fiber optic. Now, fast forward 3 years from now, it gives you around 1.5 billion per annum of
Yeah.
revenue. Significant, really, upside. And that is what we're talking about, growth drivers.
Yes.
Fiber optic. Then you come to LPG, same conversation. Very exciting because, again, there's an investment that's been earmarked for LPG Nairobi, about 12 billion. And then again, if you look at our pattern in terms of energy consumption
Yeah.
and fuel, that is a conversation that needs to happen because today we have a few players enjoying I would say oligopoly within the sector. We want players like KPC to drive that conversation and move to the top 2, top 3 market player within that particular segment. And again, we're anticipating revenue around 2027, 2028 to actually start driving the top line and the bottom line based on investment that will be made in the next 2 to 3 years. That is on LPG. Of course, that conversation is also extended to Eldred, where we're seeing an investment being earmarked for LPG in Eldred to the tune of around 3 to 4 billion shillings. Okay, so the conversation of LPG will be Nairobi and Eldred combined. I've talked to you about the Malaba line, whether it's Eldred to Malaba. Once completed, to the cost of around 24 billion per annum, it will be giving the company an additional 4 billion per annum in revenue. All right, that is what we're talking about when we talk about expansion. So fiber optic is a good way of diversifying. We talked about LPG, but also there's KPRL. Okay, massive potential, because when you look at it, we talk about
Break that down just for someone who's not keen on what it is.
absolutely. So the Kenne pipeline, the refinery limited. So if you look at that particular Kenne Petroleum and Refinery Limited, if you look at that particular company today, it's been amalgamated to KPC. So we're talking about KPC as a group, but going into the future, plans are on the way to actually dissolve KPRL because you don't want to sit with two board, two management team when you've actually integrated pretty much all your operations. But then again, there's no conversation about anyone losing their job. So it's just, amalgamating all the teams to drive, strategy. Okay, so KPRL today sits on 377 acres of land and significant infrastructure for storage, but also, you have a 9.2 megawatt power plant. And the plans are very clear that into the future, it will be the reference when it comes to crude oil handling. So when we talk about our oil being produced in Turkana, to be handled at KPRL level before it can exit the country. Secondly, it will be a trading hub. For the OMCs that would want to have transshipment, on the shore of Kenya now, distributing to other countries, we're giving them through KPRL a platform to do that. Again, we've talked about commodities, speculation that has been factored in. So if I look at the future of KPC, breaking it in terms of possible growth drivers, fiber optic, of course, rank highest in terms of immediate. But then also, if you look at LPG, equally exciting. KPRL, the potential is limitless. And then, of course, the Malaba line being significant. Of course, there's also line 7 that will be coming to be redundant to line 5, which is the main line from, Mombasa to Nairobi, 450 kilometers of pipeline. And the idea is really risk mitigation, where instead of increasing your capacity consistently on, line 5, you actually have, another line coming in to actually give you that extra capacity and by extension, mitigate against the whole dependency on one line.
Daktari, I mean, it strikes me, first of all, I'm trying to remind myself that you sit as the lead transactional advisor from Faida Investment Bank, not internally as a board member or even managing director of KPC, because you've really taken the time to understand the business and even look at the future. And the reason I bring that out is, as someone is buying in, they want to understand what their plan is. And I hear, or at least what I'm hearing you advise, and as a last word, it seems you are advising more for the long-term investment, not to buy now. And you know how sometimes people would buy now and sell almost immediately and expect returns overnight. What's your advice to the objective number two, the Kenyan? Um,
We're telling Kenyan not to miss out on this
yes.
opportunity and to be investors, not traders. That is, you're going in with a long-term view
Yeah.
because that's your saving. And in economics, someone will tell you that saving equals investment. And if indeed you choose equities as an asset class to go into,
Yeah.
it's not Forex, it's not CFDs, it's not something that you want to speculate around.
Yes.
You want to really encourage the common investor to take that long-term view, because in our own assessment and analysis,
Yeah.
the value of this company will double in 4 to 5 years. Okay, the initiative that we talked about, the growth outside government bureaucracy, is one that, should they deliver 70 to 80% of their growth plans, we have no doubt in our mind that the valuation we're talking about today will double. And having said that, it is important to appeal to the ordinary Kenyan, to get into this investment at the primary level, because as we said, there's a lot of demand, in other segment, which means that potentially, you cannot read the market, but potentially we'll have significant demand even post IPO
Yes.
from other segment. And it means that that price of 9 shilling, potentially, if you miss out, you might be now chasing it going forward, which really was not the intention when we talk about onboarding as many Kenyan as possible. So really, I would say that the future of KPC looks bright, and it's a future you can share.
Right. I appreciate that. I think that's a good note to actually end this conversation. But it continues, because we'll be revisiting some of the issues, clarifying, straightening out the facts, which I appreciate you've taken the time to do so in the first, I think, 20 minutes of this conversation. Ifikie ambaye anafaa kusikia. We will tag them. But listen to the experts such as Dr. Belgrad Kenne. We've spoken to Rina earlier. We have and will continue to speak to the experts to set the record straight. But as you've heard from Daktari, invest with the long-term view in mind and your future. And you have an opportunity to invest